Most people are misreading XRP right now. While investors focus on price, a much bigger shift may be happening underneath the market, one involving tokenization, institutional infrastructure, and the future movement of trillions of dollars in financial assets. In this video, we'll break down the data, the historical parallels, the institutional developments, and why some investors believe XRP is positioned at the center of a much larger financial transformation than most people realize. One statistic has captured the attention of many XRP investors. Roughly 791 XRP wallets hold more than 3.8 million XRP each, placing them among the largest holders in the network. On its own, that number doesn't prove anything, but it raises an important question. What are large holders seeing that broader market may be overlooking? Because right now, sentiment around XRP remains deeply divided. Some investors see years of regulatory pressure, market frustration, and underperformance. Others see a digital asset quietly positioning itself with an emerging financial infrastructure. And that's where the story becomes much bigger than XRP itself. See, to understand why, we need to step back and look at a pattern that is repeated throughout financial history. See, the greatest wealth transfers rarely happen when everyone's optimistic. They often begin when confidence is low, assets are unpopular, and most people are focused on the wrong signals. And that brings us to our financial crisis that changed America forever, the panic of 1873. If you want the satellite perspective on XRP and crypto and want to cut through the daily chaos and noise, subscribe to the channel. I break it down simply so you can see what actually matters in the market. Ladies and gentlemen, to understand why some investors are so focused on accumulating during downturns, let's go back to 1873. The world had entered a period of rapid industrial expansion. Railroads were exploding across America. Credit was easy. Speculation was rampant. Investors believed prosperity would continue forever. Then everything changed. The panic of 1873 triggered one of the most severe economic downturns in history. Banks failed. Businesses collapsed. Markets crashed. Millions suffered financially. Yet while the public feared the future, certain industrialists saw opportunity. John D. Rockefeller acquired distressed assets. Cornelius Vanderbilt expanded his influence. Andrew Carnegie strengthened his position. They purchased valuable infrastructure while others were forced to sell. The lesson? Economic stress often transfers assets from weak hands to strong hands. Now, this is what most people miss, unfortunately. The wealth wasn't created during the crisis. The wealth was created by what happened afterwards, when the system recovered. Let's talk about XRP's rich list. See, today, XRP investors often discuss a statistic that has attracted significant attention. Roughly 791 XRP wallets hold more than 3.8 million XRP. These wallets represent approximately the top 0.1% of holders. See, for many observers, this raises an important question. Why are some entities accumulating such large positions? Supporters argue those holders are positioning themselves for future utility-driven adoption. Critics argue concentration presents risks. See, both viewpoints matter because concentration can signal conviction, but it can also signal volatility. See, what's important is understanding the broader context rather than blindly following narratives. See, price alone doesn't tell the whole story. Structure matters. Adoption matters. Utility matters, okay? So think of today's blockchain networks like canals during the early industrial age. Thousands of businesses depended on these transportation routes. The canals itself wasn't the product. It was the infrastructure. Blockchain advocates often make a similar argument. The real value may not come from individual transactions, but from the network that enables them. That's why many investors are watching tokenization, settlement systems, and payment rails rather than daily price movements. Short-term noise, long-term structure. Prices reacting, systems evolving. Pay attention to what's quiet, I always say, ladies and gentlemen. Let's talk about contrarian investing for a second. See, one recurring theme throughout financial history is contrarian behavior. The best opportunities often emerge when sentiment is at its worst. That doesn't guarantee success, but explains why experienced investors pay close attention to fear. When markets become emotional, valuations can disconnect from reality. Many XRP supporters believe current sentiment reflects this dynamic. See, recent market data suggests XRP holders haven't been realizing substantial more losses than profits. This is really important, ladies and gentlemen. See, historically, periods of extreme pessimism sometimes occur near major turning points. Not always, but often enough to attract capital. Listen, the real shift comes when institutional infrastructure begins appearing around digital assets, ladies and gentlemen. Okay? Because institutions don't build for tomorrow, they build for decades. Institutional developments are very important to pay attention to. One development attracting attention is the continued expansion of institutional crypto products. Major financial organizations have introduced new crypto-linked instruments, indexes, futures, custody solutions, settlement systems. These developments don't guarantee adoption of any specific asset, but they demonstrate something important. Digital assets are increasingly being integrated into traditional finance. That's a structural trend, not a speculative headline. Investors should always separate adoption from price appreciation. The two are related, but they're not the same. And that's really important to pay attention to. Let that sink in. Technology can succeed while markets remain volatile, and a market can rally while fundamentals remain weak. Understanding the difference is critical. Tokenization, the next frontier, is what a lot of people are paying attention to. See, perhaps the most important conversation isn't cryptocurrency. It's tokenization. Tokenization refers to representing real-world assets on blockchain networks, treasuries, bonds, funds, real estate, stocks, potentially trillions of dollars worth of assets. Several major institutions are actively exploring this transition. Some projects estimate tokenized assets could reach multiple trillions of dollars by 2030. Whether those projections prove accurate remain uncertain, but the direction of travel is clear. Financial assets are becoming increasingly digital, and blockchain infrastructure is competing to support that transformation. Now, this is what most people miss. The winners may not be the assets with the loudest communities. The winners may be the networks institutions actually use. Okay? Look at the internet boom. Let's look at another historical example, the rise of the internet. Okay? During the 1990s, investors focused heavily on websites, .com stocks, online companies. Speculation dominated headlines. But after the crash, the true winners emerged. The infrastructure providers, data centers, networking systems, cloud computing, digital payment networks. The internet transformed society because infrastructure matured, not because speculation survived. The same principle may apply to blockchain. Speculation creates attention. Infrastructure creates longevity. Security and custody matter very much. See, as digital assets mature, security becomes increasingly important. History shows that wealth preservation is just as important as wealth creation. Institutional investors understand this. That's why custody solutions continue expanding. Hardwire wallets, multi-signature systems, professional custodians, inheritance planning, family trusts. These topics may sound boring, but they're essential. Because if digital assets become a meaningful asset class, security infrastructure becomes a necessity, not an option. The agentic economy is very important, ladies and gentlemen. It's big what's coming. See, beyond finance, another transformation is unfolding. Artificial intelligence, automation, autonomous agents. See, some analysts describe this future as an agentic economy, a world where software systems transact with one another, exchange value, verify information, coordinate activity, potentially without consent, human involvement. Imagine that, right? If such systems emerge at scale, efficient digital settlement networks could have become increasingly important. Blockchain advocates argue that this is where distributed ledgers may provide value. The idea remains very early. The timeline remains uncertain, but the conversation is growing rapidly. Imagine the modern economy as a massive city for a second. Banks are buildings. Businesses are shops. Consumers are residents. Now imagine replacing every road overnight. The buildings remain. The activity remains. But movement becomes impossible until new infrastructure connects everything. Some blockchain supporters believe tokenization and digital settlement represents a similar transaction. Not replacing the economy, upgrading the roads beneath it. Whether XRP ultimately plays a major role remains to be seen. But that is the thesis many investors are watching. The super app vision. Around the world, technology companies are increasingly exploring integrated ecosystems, messaging, payments, banking, commerce, identity, everything connected. In China, WeChat demonstrated how powerful this model can become. In the United States, multiple companies have explored similar concepts. Some investors speculate future payment systems could involve blockchain infrastructure behind the scenes. At this stage, much remains speculative. There's no certainty regarding which network will ultimately power these systems, but the direction is clear. Digital integration continues accelerating, and payment infrastructure remains a critical component. So what's fact versus speculation, you might be asking? Let's separate facts from forecasts. Fact, tokenization is growing. Fact, institutions are exploring blockchain infrastructure. Fact, digital asset markets continue maturing. Fact, regulatory frameworks continue evolving. Speculation, future XRP prices, future market dominance, future adoption rates, future partnerships. Investors should understand the difference because narratives can be powerful, but evidence matters. The strongest investment decisions combine vision with discipline. So what's the core lesson? Throughout history, transformative periods have shared common characteristics. Confusion, volatility, skepticism, opportunity. Most people focus on immediate price action. The most successful investors often focus on structural change. That doesn't guarantee success. Nothing does. But understanding structural trends can provide perspective during periods of uncertainty. Short-term noise, long-term structure. Prices reacting, systems evolving. I always tell you to pay attention to what's quiet. So where does XRP fit into this story? Supporters see it as a future settlement asset. Critics remain unconvinced. Institutions are watching. Regulators are evolving. Technology continues advancing. And the broader financial system is changing faster than many realize. Whether XRP becomes a central piece of that future remains unknown. But the conversation surrounding digital infrastructure, tokenization, and global settlement is becoming impossible to ignore. The biggest question may not be where XRP trades next week, ladies and gentlemen. The bigger question is this: what does the next generation of financial infrastructure look like? And who will own a piece of it? If you enjoyed this deep dive, subscribe to the channel, hit the like button, share this video with someone who you think needs this information, and let me know in the comments. Do you think that XRP is becoming financial infrastructure, or is the market getting ahead of itself? Thank you for watching always, ladies and gentlemen. I'll see you in the next one. Hope everyone's having a great day. What a time to be alive. Really, what a time to be alive. I want to welcome all the new members of the Patreon, all the new members of the membership channel. In the last video, I was going over an analogy I use over the phone with clients over and over and over again. You have to understand, most of the financial markets that we live and trade in today, and none of this is financial advice, just my own opinion retains any capacity. So much information has to be published that you can see people's position sizes, what they're cycling in, what they're cycling out. If you learn how to connect all those dots, it tells a really, really good recce of what's happening and why. I was taught to do this first with commodities, looking at the COT page of different things, understanding weather patterns, how it would influence crops, what countries would decidedly destroy crops to influence prices. Unlike consumables, the world is going to change because our financial system has to evolve. And why I'm saying unlike consumables, right now we have an explosion more of the screwworm. We were telling about this before it even got into the United States. We were taking advantage of this. Like I had said in a previous video about the migrator. See, this is the most important thing to understand here. Our financial system has no choice but to evolve. I'm going to give a real gut check here right now. The entire carry trade conversation is what people say A or B or D. I'll never disseminate who's right or who's wrong about that. I used the carry trade in the early 90s to buy my first house from a transaction I did. As our first hedge fund was Forex, we took advantage of a lot of these things. Again, it was simply borrowing yen and putting it in a higher yielding currency. People did the Kiwi, people did the Loonie, which is the Canadian dollar, the Aussie, the South African Rand, because they had higher interest rates. So you use the interest rate differential straight like that. Zero interest rate policy led to the zombie nation in Japan. Didn't work in England, and it sure did not work in the United States. So the philosophical conversation about what will work and what won't work, there needs to be a solution to this. I know what I think the solution is. I'm not going to discuss this here on this video, but there has to be a solution. So ask yourself this question. What do you think the solution is? I didn't like Bitcoin in the beginning for a lot of reasons. I didn't think it was a smart play. I had a massive amount. I sold it. I said in the Patreon, the levels, I sold it. I still made a very, very nice profit. Had I kept it and for the fun, forget about what it'd be worth it. Instead of making 7 numbers, it would be a lot more zeros. Why I love XRP, and I call it the anointed one, and it's no reference to any form of religious things. And if it offends anyone, I apologize. I believe it's the only technology that can solve the situation the world is in right now. That's what I believe. I don't follow anyone else in finance. I follow what I do because I have a very different read of finance. Being a financial mercenary, I make my own decisions because I look at finance as war. I don't respect what banks do. I could care less. A bank is a name. You have people that work there one day and leave the next. I had the fortunate experience to clerk for some of the most powerful people in finance and commodities on the New York Mercantile Exchange. Taught me everything. Critical thinking is something that lacks now. People don't share their own thoughts. Instead of doing the hard research themselves, they run for an easy example, an easy answer. That's really probably rooted in garbage. That's why they end up with ungats and they get cut up like sushi. The world has to change, has to. Has no choice at this point. I said in the last video, we're waiting for the tides of investment to flow back out. I try to give you guys analogies of what I say to institutions and family offices and families about what's happening and why. You have to understand something. People have to make their monthly numbers. You have major banks on Wall Street now lowering their forecasts and targets for metals. I told you that we were short-term bearish, long-term bullish. That means I'm bullish 24 months out. I buy when things are on sale. I like rain checks. Who doesn't like saving money? So ask yourself this question. If the financial system's broken, how is it fixed? Some people say gold is the answer. I don't know. I know that the accounting has to have a solution. And to me, I believe XRP, and this is my own opinion, is the solution. That's what I believe. I'm not going to do a video about this. It would be too long. I spent hours on the phone explaining this and why I think is why. But understand something right now. At some point, the Fed and people that watch the Fed is going to telegraph something different. And what's different about what they're telegraphing is they're not going to really lead on to what they're going to do and why. Now, whether that's good or bad depends where you sit on the side of that conversation, right? To me, it makes no difference because I never really paid attention to what they said. I had my own recce, my own viewpoint. So what I think, at some point, people are going to realize that they're not going to raise interest rates. Half the time, financial policy, in my opinion, is nothing but cover for people to cover financial positions. And financial policy can be the reason to open financial positions. Everybody on the street does the same positions. That's why when the crash happened with the mortgage-backed securities, which we had nothing to do with because I couldn't understand teaching the derivatives. I could never understand how an asset that derives itself from another asset, a mortgage-backed security derived itself from air. You got crude oil. heating oil, kerosene, jet fuel, RBOB. RBOB is unleaded gasoline contract in the commodities market. So ask yourself this question. What's going to happen and why? People would rather pay more money for something at an expensive price than accumulate when it's down. Why? But if you go back, and I always use historical examples of here, why, I believe we're at the cusp of some of these changes, right? Everybody remembers the Great Depression. I study economic history in every country and why. I study in every financial product and why. I find it fascinating. Humanity as a species hasn't changed. Greed, fear, euphoria, it's all there. What changes is the speed and the technology to make transactions and speculate off of that. That is what changes. See, the internet's the great equalizer. We went over Napoleon, Waterloo, who financed that. We went over what they got in return. We went over all of these things. Ladies and gentlemen, when Operation Printed 2 when it begins, and there will not be any flare that goes up to tell you that this has begun. It won't be. It will just slowly start to happen like the tide will go out. It'll go from high tide to low tide. And when it starts going out, people who accumulated during high tide, when things looked bleak, they prosper. So for all the people here, this is not financial advice, it's my own opinion, everything has any capacity, who work in a second job. I salute you. Take out a notebook. See, I don't like doing things on the internet. I despise the internet. I really do. I despise computers. I don't like it. I'm old school. I write things down. When you write something down, it's more real. Okay? No different when I first started the trade. I used to throw cards into a pit. It was real. It wasn't numbers. You had to stop and think before you did something. As things change here right now, and why I'm telling you to write things down, write down your holdings, your goals, short-term, medium-term, long-term, monthly goals, okay? That makes this real. But again, I believe at some point the market and the more courageous people will begin to realize that rates are not going to go higher. See, to me and our organization, I like when things get crushed. I like the misery in the markets. I like the chaos in the markets. Chaos is how we make money. Chaos is volatility. Been in this game since I'm 15 years old. I learned from some of the most amazing floor traders and families on the floor of the Mercantile Exchange. And even from there, even bigger. I like giving back here. I love even more giving back in the Crypto Republic Desk Monthly and the Patreon. I love teaching there. Because you know what? There's no more floors to go work at. There's no way to be a journeyman in finance anymore. We get phone calls every day of companies that want to train AI in what we do in our proprietary trading systems, but part of it's human. And you cannot automate a human. I'm sorry. You have some very, very, very sharp people doing things for reasons that I don't expect most people to understand. We went over the East and the West tranches, the BRICS, the unit, the debt treasury system, gold being an HQLA, silver being monetized in India. We talked about Bhutan, Kazakhstan. We talked about gold-backed crypto. We talked about so many things in previous videos. And if you're new here, do subscribe and like the video and share, because the end of the video is where you get the candy from the Italian ice and we talk about what's really going on. And I'm not freaking out, screaming and yelling here. You should be writing more of what I say down. This is not financial advice. It's my own opinion and retains any capacity. Look, and this is really important. This is a generational, once-in-a-lifetime opportunity. The fact that the wealth and the wallets are consolidating around coins should tell you all you need to know. I saw this in concessions and land all over the world. You can't be a Luddite and fight what's happening here right now. That's like when people think that gold is no good or silver's no good, metals, I think they're out of their mind. I think they're doing bath salt. When things crash, that's when you keep your powder dry and you begin to allocate and start taking a position, start adding and adding. Nobody wants to buy things when it's in the red. I don't understand. I'm going to have to do some videos about this. I don't understand why. They want to wait till it's rising. Why? Slowly add to what you're doing. Have your goals and your convictions, right? People arguing about XLM, XRP, blah, 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 blah. They chose this, they chose that. Do you think on a concession it matters that you're pulling out silver, copper, gold, platinum, palladium, other metals? Do you throw one of them away because you don't like it? Come on now. Sometimes you have to take a step back and realize why you're doing what you're doing. But I believe XRP is the answer to a big financial problem. I don't buy into this, RLUSD or exit liquidity with this, with that. I look at what they're building and why they're building it. I have a very abstract view in finance. That's why we're retained by the people that we retain. But I was very fortunate to have the mentors and the people teaching me in my family in finance. I was also very fortunate enough to be able to work in many parts of the world where understanding people is very important. The metals market now is centered in Asia. If anyone's going to argue with that, they're doing bath salt. The days of COMEX and LBMA are done. They'll always be there for hedging and some other stuff, but it's over in Asia now. You have to understand this. I tell you, we watch The Widowmaker every night in Japan. We watch things. This is not going to happen overnight. The same way erosion doesn't change the landscape overnight. It keeps doing it and doing it and doing it the same way that water just cuts through anything it does. Cuts through rock. What is the most destructive instrument on the planet? Water. To me, finance is water. You have to learn to sail on the water or you drown in the water. That was one of the biggest lessons I ever learned in finance from a very powerful floor trader who I used to watch in the closing in the RBOB pit come in and do 500 lots in the closing 10 minutes. I was fortunate to learn everything about crack spreads from them. So why I say this to you, and I'm talking more sedated today, don't lose your Gucci conviction here and your Gucci clarity. We're walking up the frosty mountain with our frosty beverage because it's a long, cold march to the top. It's long. And along the way, if you don't have a plan and you're not following your mat, that's how you get cut up like sushi. But to me, when the election cycle is over, I have my own opinions of what's going to happen and why. When the Clarity Act is finished, we're in the camp that it gets done. You can hate on coins, but if you're not involved in them, it doesn't matter what happens. So with that being said, if you want to come and learn to trade, learn what we learned on the floor of the New York Mercantile Exchange, learn to invest, come and join the Crypto Public Desk Monthly. Join over 600 active traders, investors who are learning every day, that want the deeper macro research, that want to learn everything, every market, equities, commodities, spot, crypto, everything. Ladies and gentlemen, this information is for entertainment, informational, educational purposes only. This is not financial advice. Always consult a licensed financial advisor before making investment decisions. Never invest based off of watching a YouTube video. I say that we're the remora because we swim underneath the sharks making the moves. Remember that. Don't get caught up like sushi. I'll see you on the front lines. I love you all. Have a blessed day.